Ever wondered how the concept of banking began? Who thought of this idea of keeping money in a centralized place? It's a question that might have crossed your mind once or twice, or maybe it's a thought that's never crossed your mind at all. Regardless, the origin of banking is a story worth exploring, filled with intrigue, innovation, and a remarkable evolution over centuries. It's a story that starts in the most unlikely of places, and has now become an integral part of our daily life. Imagine a world without banks, without credit cards or loans. It would be a world where every transaction is in person and in cash. Now that's a world that's hard to even fathom, right? Yet that was the reality for most of human history. So how did we get from there to here, where banking is at the heart of our economic systems? Well, buckle up, because we're about to dive into the fascinating history of banking. The concept of banking, surprisingly, dates back to ancient civilizations. Yes, you heard it right. The roots of banking are not a product of modern times, but a practice that was alive and thriving thousands of years ago. In those times, banking was not about depositing money or withdrawing it from a safe, secure institution. No, it was predominantly about loans. Let's take a quick journey back in time to understand how this came about. In the cradle of civilization, ancient Babylon, the first known banking system was established. It was around 2000 BC, and the Babylonians developed a system where they would lend out grains and precious metals to traders and farmers. The borrowers would then repay their debt with interest once they had made their profits. Now, let's sail across the Mediterranean to ancient Greece. Around the 5th century BC, Greek temples started serving as the financial hubs of the city-states. The temples didn't just hold divine statues and sacred relics, they also housed coins, precious metals, and other valuable items. These temples would lend out these assets again, with the expectation of repayment with interest. Finally, let's march to ancient Rome. The Romans refined the banking practices of the Greeks and Babylonians. They established private banks that would provide loans to individuals and businesses. They even had a form of bank checks and developed rudimentary forms of bills of exchange, a precursor to modern banking instruments. So, you see, the concept of banking has been around for a very long time. It began as a system to support commerce, to fund wars, or to simply help a fellow citizen in need. And while the methods and systems have evolved over the centuries, the core idea remains the same. So banking, in its most primitive form, started as a system of loans and credits. And it was from these ancient civilizations, Babylon, Greece and Rome, that we inherited this system, which continues to shape our world today. As we move into the Middle Ages, banking begins to take a more familiar form. This period, spanning from the 5th to the 15th century, witnessed a notable transformation in the way money was managed, stored, and exchanged. The Middle Ages saw a surge in trade and commerce. As a result, there was a growing need for a more organized and secure way to handle money. This led to the establishment of more formal banking institutions. These institutions offered services such as loans, deposits, and currency exchange, which are still central to modern banking. Now, let's spotlight the Knights Templar, an interesting player in the evolution of banking. They were a monastic military order founded in the 12th century, known for their role in the Crusades. But what's less known is their role in the financial world. They developed an innovative system that allowed pilgrims traveling to the Holy Land to deposit funds at one Templar establishment and withdraw the equivalent at another. This early form of banking not only safeguarded travelers' wealth, but also facilitated the movement of money across regions. Moving on from the Knights, let's sail to Italy, where the roots of modern banking were firmly planted. Italian merchant banks emerged as powerhouses of finance. They pioneered practices such as bill of exchange, which allowed traders to avoid carrying large amounts of cash, and double-entry bookkeeping, a system that is still in use today. These banks were also among the first to offer negotiable instruments, a precursor to the modern check. The city-states of Florence, Venice, and Genoa became the financial hubs of the era. Of these, the Medici Bank of Florence, founded in the late 14th century, was the most influential. It developed a network of branches across Europe and is often hailed as the greatest bank of the Middle Ages. So the Middle Ages, a time often associated with knights and castles, was also a period of profound financial innovation. This era marked a significant shift, setting the stage for what we recognize as banking today. Fast forward to the 18th century, the concept of banking crossed the Atlantic. As the New World began to grow and evolve, so too did the need for a structured financial system. The concept of banking which had its roots in ancient civilizations and developed through the Middle Ages, made its way to the shores of America. It was in the year 1791 that the first Bank of the United States was established. Picture this: an America teetering on the brink of financial instability post-Independence War, Alexander Hamilton, the nation's first Secretary of the Treasury, seeing the need for a central banking authority. His vision was to create a bank that would not only provide financial stability, but also stimulate economic growth. Thus, the first Bank of the United States was born, but like any significant change, it was met with controversy and resistance. Critics feared that the bank would become too powerful, centralizing wealth and influence in the hands of the few. There were debates over the constitutionality of such an institution, and even after its establishment, the bank's charter was allowed to expire in 1811 due to political opposition. Despite these challenges, the bank was rechartered in 1813, only to lose its charter again in 1836. Yet, the concept of a central bank persisted, and the struggles surrounding its inception only served to underline its necessity. Throughout these turbulent times, the banking system in America was continually evolving. It adapted to the needs of a growing nation, navigating through political controversies, financial crises, and societal changes. And while the form and function of banking have evolved over the centuries, the core principles remain the same: to provide financial services, to stimulate economic growth, and to maintain financial stability. Despite its rocky start, banking in America was here to stay. And today, it stands as a testament to the resilience and adaptability of the American financial system, a cornerstone in the structure of the global economy. In today's world, it's hard to imagine life without banks. They've become so intertwined with our daily routines and large-scale endeavors that they're almost invisible, like a utility we take for granted. Yet the modern banking system is a marvel to behold, a labyrinth of transactions, services, and innovations that span the globe and touch nearly every aspect of our lives. Over time, banks have evolved far beyond their initial roles as custodians of wealth and lenders of capital. Today, they offer a multitude of services designed to meet our ever-changing needs. From managing investments and providing insurance to facilitating international trade and offering financial advice, banks have grown into multifaceted institutions that help fuel economies and foster personal growth. The advent of technology has further revolutionized banking. Online banking, for instance, has made financial management more accessible and convenient than ever before. It's now possible to check balances, transfer funds, pay bills, and even apply for loans from the comfort of our homes, or on the move. Global financial services have also expanded, connecting markets and economies worldwide. These services enable the smooth flow of funds across borders, supporting international trade and investment. Banks today are not just local or national entities, they're global operations, playing a key role in the interconnectedness of the world's economies. Moreover, banks play a crucial role in financial inclusion, striving to ensure that everyone, regardless of their income level or geographical location, has access to basic financial services. By doing so, they empower individuals and communities, drive economic growth, and help reduce poverty and inequality. From facilitating the purchase of your first home to supporting the growth of multinational corporations, from helping a small farmer in a remote village to financing the development of renewable energy projects, banks touch every corner of our world. They're not just about money, they're about dreams, ambitions, progress, and change. From ancient civilizations to the digital age, banking has come a long way and continues to shape our financial world.